G'day everyone and welcome to 7 Questions, a podcast that shares the stories and compelling lessons founders, investors and leaders shaping our economy. I'm your host, Gerard, founder and investor at Partner and co-founder of Create Financial. Through 7 Questions, we explore the founder journey, idea to legacy, uncovering the insights, lessons and defining moments that shaped each founder and the amazing business they built. Whether you're a first-time founder, serial entrepreneur, investor, or someone looking for insights on entrepreneurship and what it takes to build a world-class company, these conversations are designed to inspire you, get you thinking, and hopefully you'll find some timely wisdom that propels your journey. G'day everyone. Welcome to a special episode of 7 Questions. I'm here with my co-founder and the managing partner of Create Financial. Welcome, Roman Galikov.
Thanks, Wayne. Good to be here.
Mate, I thought, given the fact that we just released an episode on 7 Questions about R&D Tax Incentive loans and the amazing work that Alex Knight is doing at Advanced, I thought we should have a bit of a chat about R&D Tax Incentive. And what are some of the lessons and some of the things that you're seeing, that we're seeing at Create Financial? How's AI coming into play to help companies prepare their R&D tax incentive submissions?
Thanks, Wayne. And it's, I guess, worth just summarizing, right? That our clients are all in the innovation ecosystem and we look after them from tax perspective with advisory services, and all of them have scope for R&D tax incentives. So we look after the evidence as well as the application itself. AI is changing the game without a doubt. And it's, I guess, applicable now throughout the entire life cycle of R&D tax incentive, from preparing evidence, analyzing evidence, making sure that everything is described as the program requires you to describe them, all the way to preparing the actual application. And the application itself becomes a very low effort exercise if all the things in preparation have been done contemporaneously, right? We use that word quite often in R&D tax incentive: contemporaneous evidence, contemporaneous documentation, sort of meaning you attend to it as you progress through the year, not kind of once a year, as may be the case for some startups out there.
Yeah, look, I think, by the virtue of a company being an early stage company that's really focused on creating new intellectual property and taking that to market as new products or new services or new business models, they're often lean companies. And the reality is that the structuring of the R&D documentation during the year or contemporaneously can sometimes be hard, right? And so it's often a scramble at the end of the year to go back and review all your notes, all your sprints, all your different strategy sessions and capture all that detail. So today companies can use, they can work with companies like us at Create Financial to help them do that. And we use AI. And given the fact that, we're an accounting practice and we understand the requirements of the submission, and we can help a company make sure that what they're claiming for is accurate and is allowable. And I think that's really important, right? Because no company wants to go through the challenges of inadvertently claiming something that they didn't mean to claim and then having to justify that with an audit and that kind of stuff. It's a waste of time. It's expensive. And it's also, it's a distraction from the core game, which is building things that are really valuable for people. R&D tax incentives are really set out to help Australian companies grow. And you can be a small company or a large company. You can be in any industry sector. If you're innovating, if you're investing in building new things, new services, new business models, then you should be thinking about what's the R&D tax incentive that I could be entitled to and how would I go get it? So, Roman, how would people go get that? And, how could they start by having a conversation with you?
Well, we're on LinkedIn and we're at most startup and innovation events around Australia. But LinkedIn is the best way to connect with us for a chat, or directly via email at roman@createfinancial.com.au. And You're right. It's a great source of funding, right? Because it is a refundable tax offset, and it's applicable to companies in the very early stages. So as soon as you've spent more than $20,000 on eligible R&D activities, you're effectively in scope for the tax incentive. And the program is not competitive, meaning if you've got your evidence and narrative right and you apply within the time frame, you're effectively getting it. And in fact, we always like to refer to sort of the preference of capital, right? Your customers are your number one source of capital. Then grants and tax incentives, such as R&D tax incentive, is the second in the order of preference. Then likely debt, and then only then there's equity investments, right? And a lot of time founders tend to focus on the equity side of things rather than the other three options. The debt piece is really, really important as well, because as you go through the year and incur R&D related expenditure, what happens is you're effectively accruing an asset in your business, this future refund that your business will be getting when it's gone ahead and lodged the application form and then the tax return and then obtain the tax refund. That's real cash to hit your bank account, which is great. And lenders that operate in that space understand that, right? So as well as get the refund, you may also be able to access some debt funding that can help you accelerate or just achieve the objectives.
Which is exactly what we talked about on episode 2 of 7 Questions when Alex Knight talked about advanced R&D and how they provide R&D tax incentive loans specifically against the accrued R&D. So they take into consideration how much R&D you've done, what that refund will be, and then they'll loan you a proportion of it so that you can do more R&D. If you do more R&D, that increases the size of your tax refund, right? And in essence, if you're smart about it, you can potentially get enough additional R&D to cover all your loan costs. So you are truly accelerating your business, that is investing in building better products and services and getting those in the market and growing your revenue and therefore growing your enterprise value without taking equity, without doing equity funding, right? Which is really important because you don't want to dilute too early if you're a founder. You want to save that dilution to the point in time where you can go and raise a round that is truly attractive to investors and get the best possible terms for that investment.
I guess, Wayne, what you said is also true in context of other debt products, right? So specific purpose-built R&D lending is excellent. However, if you may be a little bit further along and you are considering other debt options such as venture debt or even more traditional debt options, making sure that you have an understanding of that asset that needs to be present on the balance sheet and presenting it to the lender can improve your chances of securing other debt products as well.
Awesome. Create Financial provides accounting, tax, and commercial advisory services to early stage innovative companies across all industry sectors. So you could be in ag tech, defense, you could be in deep tech or med tech, or you could be in traditional software. If you need a hand with your R&D tax incentive, if you want to do it easier, do it faster, and do it cheaper because we are using AI to help us get that done, then reach out. If you're working with a traditional R&D tax incentive advisor, be thoughtful because today AI can truly help you do that at a fraction of the cost. And so we take that into consideration in the way that we price and charge for our R&D tax incentive support. Roman, next steps?
Next step, reach out to us via email or via LinkedIn for a chat. I'll just add to what you just said. If your R&D tax incentive consultant is not doing things differently already today that you're noticing by way of the way they operate or the way they charge you, you should be asking them how they're leveraging AI in their practice.
Yep. Awesome, mate. Have a great day.
Thanks.
Thanks for listening to this episode of 7 Questions. If you'd like to learn more about the founders, you can get a link to the full show notes in the description below. Have a great day. We look forward to you joining us on the next episode.